Hi folks, I'm Paco Torres with Keller Williams Realty, here with another video on the lending side of the home buying process. I have with me again Ben Freshman from George Mason Mortgage, here to help. Hi Ben.
Thanks for having me again. Appreciate it.
Absolutely. Thanks for being here. All right, Ben, I thought we would talk today about the big three loan types that are very common in Virginia. There are many loan types out there, I know hundreds of them, but I thought we'd focus on the big three, the most commonly used ones, being conventional financing, FHA financing, and VA financing.
Right.
Could you start off with telling us a little bit about conventional financing?
Absolutely. So your conventional loan is going to be the most common, most popular loan out there. It's going to cover a wide variety of loan amounts, down payment options, even down to zero in some cases, and property types. So your conventional loan is going to be generally a little bit harder to qualify for. For example, minimum credit score is 620 usually. Your debt to income ratios, we're going to want to keep those around 45%, so to speak. Now, in every case, we can get creative and work with you on certain things, but generally, that's kind of how the qualification would work and where we want to keep those limits.
And is there a limit on the price point that you can get a conventional loan for?
Yes. So in our area here in Northern Virginia, it's going to be a max of $726,500. That's going to be the highest loan amount that we can go to for the conventional financing. Anything above that, we're going to be in the jumbo territory.
All right. Thanks for that, Ben. One question that I do get is about PMI, private mortgage insurance. Could you tell us a little bit about that?
Sure. So that's going to be involved with a conventional loan when you're looking at the lower down payment options. There's usually several ways that we can handle the private mortgage insurance, either as added on to your monthly payment. Sometimes it gets built into the rate, take a little bit of a higher rate because you're putting down a lower down payment. The reason for private mortgage insurance is why it's there is that these are generally looked at as a little bit more risky from the lending perspective. We definitely want to let you get into that loan, but we also got to make sure that we're covered as well. So for those lower down payment options, you kind of have to take a little bit of a hit there on that private mortgage insurance.
All right, great. Guys, something to look out for, PMI. Now let's move on to the next loan type, and that is FHA. First off, could you tell us what that stands for?
Sure. FHA stands for Federal Housing Administration, and that means that this loan is insured by the federal government. Okay, so one of the biggest benefits of these FHA loans is that they're a little bit easier to qualify for. They allow for lower credit scores and higher debt to income ratios.
All right, Ben, so with FHA, is there a limit to the amount that you can get?
There is. Yeah, again, in our area, which is considered a high cost area, your limit's going to be $726,525.
Okay, great. And does FHA have that PMI that we discussed earlier?
It does. It's technically called MIP, but it's ultimately the same thing. The biggest difference is that with the FHA, it's going to be there for the entire life of the loan.
All right, Ben. Now let's move on to VA loans. Can you tell us a little bit about VA loans? Let's start off with what VA stands for.
Sure. The VA stands for the Veterans Administration. So again, this loan is backed by the federal government, right? And what it does is it allows for these active duty members or veterans to do a low to zero down payment option on their loans with no PMI, lower costs, and easier qualification standards.
So Ben, is there a limit to the amount that you can get with a VA loan?
There is, but it's not necessarily a dollar figure. It's going to be based on each veteran or active duties member VA entitlement. Now that changes from one person to another, so that's something that we would look at individually for each applicant as they come through.
Folks, that was a little rundown of the big three loan types. Some of the key takeaways. With conventional financing, it is one of the most widely used financing options. It's probably the most attractive to the seller, and eventually you can get rid of that PMI. Moving on to FHA, some of the key takeaways there. You've got your low down payment options, and they are a little easier to qualify for as well. On to VA, some of the key takeaways with VA, obvious key takeaways with VA is your 0 down payment option. And of course, this is only for active duty and veterans. If you'd like to learn a little bit more about those down payment options, click the link below. If you found any value, guys, please hit the like button and share with your friends. My guest today has been Ben Freshman with George Mason Mortgage. I'm Paco Torres. Thanks for watching.